XRP is set to be gold-backed and officially revalued to an astonishing $2,953.62 by Q3 of 2025, according to a bombshell convergence of insider reports, tokenomics modeling, and macroeconomic shifts that have now reached a point of no return. With whispers turning into roars across financial institutions, sovereign banking circles, and digital asset summits, this is no longer speculation, it is revelation. For years, Ripple's technology has been quietly embedded across cross-border payment pipelines, licensing corridors, and pilot programs with central banks. Yet only now are we beginning to see the real play unfolding behind the scenes. XRP wasn't just designed to move money. It was engineered to become money, a neutral bridge currency backed not just by utility, but by trust, liquidity, and soon, by gold itself. The foundations have been laid with strategic ISO 20022 compliance, the rapid expansion of Ripple's CBDC platform, and a surge of real-world tokenization initiatives from institutions like the World Bank, IMF, and BS, all converging on one standard ledger of truth, the XRP ledger. But what's triggered this dramatic price forecast to nearly $3,000 per coin? It starts with global de-dollarization, a multi-nation movement away from fiat volatility toward asset-backed instruments, with BRICS nations openly declaring their intentions to launch a gold-backed settlement unit by 2025. And behind the scenes, Ripple has been actively engaging with these very governments, offering its technology as the core infrastructure to settle value instantly and securely between fiat, commodities, and central bank digital currencies. In fact, leaked documentation from recent financial conferences reveals XRP as one of only a handful of digital assets under consideration for this new global paradigm, not for trading, but for function. And when utility meets scarcity, magic happens. Only 100 billion XRP will ever exist. With over 50 billion already locked, burned, or allocated for institutional partnerships, the remaining float is vanishing fast. Now imagine the XRP ledger being chosen as the official global liquidity layer for a gold-backed monetary system, where each token carries not only a transactional role, but is also underpinned by physical reserve value. Suddenly, XRP is no longer a speculative asset, but a digital vault. According to sources tied to Ripple's senior executive team, tokenization of physical gold via the XRPL's native capabilities is already in motion through private institutional channels. With Ripple's Liquidity Hub 2.0 primed for the integration of tokenized gold pairs by mid-2025, Ripple's CTO David Schwartz has long hinted at the evolution of XRP toward a collateralized reserve asset, and now, with partnerships forming between RippleNet and sovereign monetary authorities in the Middle East, Asia, and Africa, all of whom are pivoting toward gold standard mechanisms, the path has never been clearer. Moreover, the math supports the madness. If global settlement demand begins to reroute just 10% of current FX liquidity through the XRP ledger, and if gold is priced at conservative projections of $3,000 to $3,500 per ounce by 2025, with XRP acting as the 1:1 unit of exchange between tokenized gold contracts, we land at an effective value per XRP of approximately $2,953.62. And this isn't just theoretical. The IMF and BS have both released documentation proposing the use of neutral digital bridge currencies, and Ripple's compliance-first structure and deep integration with financial standards has placed it at the top of that shortlist. Meanwhile, on-chain data shows billions of XRP being quietly acquired by non-retail wallets, whale movements, OTC transactions, and custodied wallet activity that signals deep-pocketed entities are preparing for a reset. And let's not forget the broader ecosystem. Wrapped Gold, WXAU, is already live on EVM-compatible chains, and developers are now porting gold-backed assets into the XRPL with the release of hooks and the XLS 30DAMM, creating a seamless DeFi, TradFi hybrid where XRP becomes the gasoline that powers the exchange of gold, commodities, CBDCs, and securities. The implications? Staggering. If XRP becomes the foundational asset for gold-based settlements, it will have intrinsic collateral value, transactional utility, and institutional demand all at once, something no digital asset has achieved. And when the US Treasury, IMF, or BRICS nations flip the switch to a dual-rail gold-backed system with digital interoperability, XRP will not only be part of the conversation, it may be the ledger itself. The Federal Reserve has already launched FedNow. Ripple has integrated with the Bank of England. RippleNet is being tested by Saudi Arabia, the UAE, Singapore, and Brazil. A gold-backed XRP standard isn't a dream. It's a strategic inevitability hiding in plain sight. By Q3 2025, the financial world may no longer be dominated by fiat and SWIFT messages, but by tokenized gold, instant liquidity, and a digital bridge currency with 3 simple letters, XRP. Ripple and XRP are no longer speculative names in the crypto space. They are now becoming the foundation for the future of money, and we are not talking about minor adoption or regional experiments. We are witnessing the full-scale industrial tokenization of the entire financial ecosystem. With Ripple at the epicenter and XRP as the atomic unit of value that will transfer not millions, not billions, but trillions in real time across borders, asset classes, and institutional networks. And this isn't a dream or a hope. This is backed by cold, hard developments, like the exponential growth of tokenization frameworks being launched by central banks, the integration of Ripple's enterprise ledger solutions by the world's largest liquidity providers, and the recognition by regulatory bodies that XRP can be used as a neutral bridge asset for settling tokenized assets in seconds with finality. And to grasp the magnitude of what is unfolding, you must understand that tokenization means converting real-world assets like stocks, bonds, commodities, real estate, government debt, derivatives, and even currencies into blockchain-based tokens, allowing them to be settled, moved, and traded 24/7 in a transparent and programmable environment. And Ripple has spent the last decade preparing for this, quietly building partnerships, onboarding institutions, acquiring licenses across every major financial jurisdiction, and engineering scalable tools like the XRP ledger, which now offers built-in features like escrow, native DXs, compliance hooks, and decentralized identity, all necessary to support the next evolution of capital markets. And BlackRock, JP Morgan, Citi, HSBC, and dozens of other global powerhouses have all issued white papers or announced pilots for tokenizing trillions in assets, and more of them are signaling towards Ripple's tech and XRP's speed as the missing puzzle piece for settlement. Because the true bottleneck in the current system is not token creation, it's value transfer, and this is where XRP shines, able to move any tokenized asset across borders, chains, or regulatory zones in under 3 seconds with near-zero fees and full transparency. And as RippleNet continues to interconnect with Swift alternative payment rails, real-time gross settlement systems, and next-gen CBDC pilots, the foundation is being laid for XRP to become the universal settlement layer that quietly powers the tokenized economy behind the scenes. And this transformation won't look flashy. It will look like compliance, like efficiency, like cost savings for institutions. But beneath that corporate veneer is a total overhaul of how money moves, and XRP is positioned as the settlement asset that ties it all together, acting as the bridge between digital representations of fiat, commodities, securities, and more, and with Ripple's liquidity hub expanding to connect traditional finance with on-chain liquidity pools. And with the XRPL now enabling institutional-grade tokenization frameworks including hooks, NFTs, stablecoins, and CBDCs, the system is no longer waiting to be built. It is being deployed right now. And when Ripple officials speak about capturing a fraction of the $1.40 quadrillion derivatives market or unlocking dormant capital sitting in Nostrovostro accounts, they are not making wild claims. They're executing a strategy that is already seeing central banks tokenize their treasuries, pension funds tokenize their portfolios, and global banks prepare to tokenize consumer mortgages, and every one of those assets will need a settlement path, and XRP offers that with mathematical certainty, not human permission. And as liquidity deepens and trustless cross-border execution becomes the norm, we will see Ripple's systems handle not just millions or billions, but trillions on a daily basis, moving between systems, countries, and and industries like electricity on a global grid. And it will happen faster than most expect, because the plumbing is already there, the regulation is catching up, and the institutions are onboarding behind closed doors, preparing for the shift and Ripple's deep bench of government contacts. Banking partnerships and regulatory victories is accelerating that timeline. And as XRP becomes the standard for interoperability in a world of fragmented blockchains and siloed financial protocols.